So my name is Danny Richards, and I run a company called CFO Dental Partners.
I'm
And I'm happy to be with you guys.
Yeah, happy to have you, Danny. We're happy to have you. I'm Melinda Hereford, coaching consultant in California.
And I'm Shelley Renee, dental practice management coach in New York.
So we're happy to be here. Danny, Shelley and I have been really looking at what are the things that dentists are going to need today moving forward to help really position themselves for success. And so, of course, you came to mind because you're really that financial guy that's about strategy. And so thank you for being with us.
Yeah, you bet. It's my pleasure. It's given the last 8 weeks of changes to the dental industry, cash flow has never been a more important facet to running a dental practice.
Yeah.
And when the practice is in periods of success where they've been producing and collecting, and they've got their checking account continues to grow, it's not nearly as crucial for them to understand cash flow and liquidity as it is when the entire world shuts down, and now they have to figure out how to navigate a lot more unknowns.
It was an interesting reality for us because Shelley and I were talking about this. You know, we really look a lot at the break even and the profit and loss, but we're looking from the perspective of revenue. And because there is usually a chunk of cash, we really haven't studied cash flow. You're exactly right. And I think that's because we've had plenty of cash in most cases. You know, we only go to look for the cash when there's not enough money, right? And so, but I think it's really important to get a grip on this right now because, you know, we are operating in an unknown time. And how do we get a better idea of really the money that's available that we're really making, not that we think we're making 3 months after the fact when we actually look at the P&L.
Yeah, absolutely.
Which is only a little piece of the story. It's not the whole story.
It is. And you know what? It's the part of the story that all of them want to pay attention to because they feel like it's the one that tells them the most relevant data right now, where it's like, hey, this is what I collected. And then these are all the things that I spent it on. And then that bottom line is supposed to tell them how much money they have.
That's it.
But that number is just a theory. Right? Yeah. Net income is not cash. It's a theory. So, right, when they...
I never liked theories. I was not a theory person.
You know,
I want the real deal.
Totally. But that's why it's such a disconnect, is because most dentists are very, they're very analytical and very like, I want tangible fact. But the profit and loss statement is not that. And, you know, if you say, well, I'm going to go, next time you go to the grocery store, try and buy your groceries with net income.
Yeah, that's good.
They'll laugh at you.
That's it. That's
right?
it.
It needs to be cash. And so when they see net income and they go, well, why isn't this cash?
Yeah.
So there's a whole other side of the story that especially right now is completely missing from them being able to say, how much money do I have? Am I going to be able to get through this right now?
Yeah.
You know, if I got PPP loan money, or if I got EIDL, or I borrowed money, I have all this new cash, how long is it going to last me? You know, how much money am I going to spend on a daily basis? All of these questions are partially answered by the profit and loss statement, but then, or an income statement, another name for it, or and the other part of the story is answered by the cash flow statement. And we have to somehow combine those two in a way that the practice owner can understand it and take action from it. Otherwise, that information is completely useless.
Yeah, it is. Shelley and her husband, he's a dentist, own a practice. And so Shelley's been onto this find all the money for a long time. And so she's been a super sleuth about going to find all the money and save money. And of course, she didn't just go on the profit and loss, the expenses. She went over on the debt side and looked at debt service to see what could be done over there too. So Danny, so Shelley, I don't know if you want to talk about that at all, because you've been on to this idea about let's find the money for a long time.
Right. I'm interested in hearing how Danny lays it out. To what detail? I noticed some practices are just hitting the rough high spots of their expenses. And I'm curious from your point of view, show us how to drill down to find the cash.
Okay, yeah, so I'll show you this little really basic cash flow forecast tool. You can get really detailed with a lot of this stuff. But what we found is that right now it needs to be, there's like a lowest, it's not a lowest common denominator, but it's like the minimum acceptable level of detail.
Good.
That still gives you a decent result.
We like simplicity, Danny, because we find that people will execute on it better and more long-term if we have that.
Yeah, absolutely. So we'll just run through this real quick, and then, you know, be sure and ask questions and stop me as we're going through, because I have a tendency to just kind of barrel through things. So this cash flow projection tool is on our website, so anybody can go and download this anytime they want to. And so you start on this page, this tab that says start here. like we said, try and keep it simple. They type in their practice name. So what's that?
So far, so good.
Yes, I like it. So they type in their name, they type in the week that they want this projection to start. So if I wanted it to start last week or this week or in a month or whatever, I can just change the date, because then the cash flow forecast tool is going to update the weeks based on that starting point.
So I have a question just to stop you right there.
Sure.
A lot of these practices, I noticed they're waiting for their bookkeeper. So there's quite a drag between when they notice. Do you suggest they switch to a weekly plan right now, or take it by the month and back it down?
So here's why this is even better. So let me answer that question with sort of like a caveat backstory. We do bookkeeping and payroll and analytics and everything for dental practices, top to bottom. Okay. So we do feel like it's important for practices to have that data and have it be real time and accurate. That's the only reason why we do that for our practices. Now, having said that, right now, those players on the field, they cannot be bottlenecks, right? Us as professionals, we cannot be a bottleneck to our practice owners getting this information into their hands.
Right.
So if they're sitting there waiting for their accountant, or they're sitting there waiting for their bookkeeper to reconcile all this information and get it to them, it's already too old.
Yeah.
So this cash flow forecast, what they can use is their checking account.
Okay.
So the data they're getting and filling in here is just, if they have like one main operating checking account, use that.
Perfect.
And just go through the week, Sunday to Saturday, and try and fill in the data that goes in for this week.
Gotcha.
So because they can count up how much they had in collections.
Yep.
Right? What were their deposits? They can count up what they had in payroll expenses. And maybe it's harder than that, but so one thing you have to learn about me, Melinda and Shelley, and you probably already know this, but I am the king of oversimplification. So
I didn't know that, Danny. That's good to know.
Ask my team. They'll tell you. So when I say like, no, this is super easy, it's like nothing to it. And then my team's like, yeah, okay, it's actually, there's more details here. But if I look at my entire week, top to bottom, of all the money that left my account and all the money that came into the account, that's really what I want to know as a practice owner.
Yeah.
Right?
That's it.
So this is all information that's the checking account only. And there's an important distinction here. So if I add up my money that says like ADP payroll transaction or benefits and things like that, I just add up this number. If I didn't pay rent this week, I don't put that I paid rent this week.
That's easy.
If I paid utilities out of my checking account, I wrote a check for it, or it's an auto pay on my checking account, I put my utilities. Now, any expense here that I have, like let's say I did pay a lab fee for $1,000, but I paid it on my credit card. this is really important because if I paid for something on my credit card, it hasn't hit my checking account yet. So it doesn't tell me how it affects cash flow.
Right.
So I don't put it here.
Okay.
But I did make a big payment to my credit card, which does affect cash flow.
And that's a way for them to simplify this whole thing is that, I mean, a lot of my clients do charge most of their, put their charges on credit cards.
Everything they can possibly put on a credit card, they put on a credit card.
Yeah.
Right? Our practice owners love their points.
They do. They
okay?
do.
We got to get miles, we got to get points. And I don't disagree with that. I do if they don't have money to buy it. But
for sure.
So, otherwise, it's fine, right? So
right.
These are the expenses and the income that actually hit the checking account.
Yeah.
Excellent.
Okay, so that tells me my total inflow is this, my total outflow is that.
Yeah.
But then there's also some transactions, and these are all they're P&L related transactions. But then I also had a payment for some equipment.
Yeah.
And that payment for the equipment got broken out between interest and principal.
Okay.
Well, this right here, this principal payment, that doesn't show up on my P&L.
Right.
Because I don't get to deduct that. But it does show up on my statement of cash flows. So I'll show you what that looks like. So these are sample financial statements.
Okay.
For a fictitious dental practice called Tim Tim Dental. There isn't a Tim Tim Dental in the entire United States. So
just to know.
I don't have to, yeah. Those are my numbers. No, it doesn't exist. So if I look here at the interest expense, that's there, but the principal payment isn't. Principal payments are here under the cash flow statement. Right here as a practice loan, equipment loan, owner's draws. Those are all withdrawals from the checking account, but that don't show up here.
Correct.
On the P&L. So to keep it really simple, I just say, okay, well, I made that payment here. Even if they wanted to keep it even simpler, they could just put the entire payment here and put no interest expense and just say, okay, this whole transaction was a loan payment.
Yeah.
As long as I keep track of it from a cash standpoint. So this week, this practice spent $13,000 more than it actually brought in because of a giant payment to the credit card, which is totally okay. This is my beginning bank cash balance. So literally how much money did my checking account have at the beginning of the week? And then this is how much my checking account should have at the end of the week. That's it. I'm just accounting for where it went.
Yep.
Okay. And then this here, this liquidity piece, I could add a few things like maybe I wrote some checks that haven't cashed. I want to put that in there because if I wrote $4,000 worth of checks that haven't cashed, I need to know that it's going to cash.
Right.
Okay. Because that affects liquidity. Ultimately, what this is going to show is how much cash do I have on hand to get through this period. Now, this spreadsheet shows 52 weeks. Okay, but it's really meant to be taken in small snapshots at a time, rolling 3 or 4 week periods. Okay, because if I look here and I say, well, I didn't pay rent this week, but I know I'm going to pay rent in week 3. So I might as well put it in for week 3.
Okay, that makes sense.
Right.
What if, Danny, what if they're taking auto payments out to fund pension and stuff? Are they counting that?
Yeah.
As an expense?
Definitely.
Okay.
Because that would go under a payroll taxes benefits piece.
Yeah.
As the pensions are, that's a.
As they're funding it.
And they know when those are going to be, so they can actually put them in. They can put them out there.
Yeah. Yeah.
Right.
If they say, no, I know that I always do it in the second week of the month, so I could stick it right here, and then I know that it's going to happen here.
Good.
And then if I know based on scheduled production or collections or whatever it is, I think I'll be able to collect this much next week. And I think I'll collect this much that week. But the challenge with this is I can't really project especially right now, how much I'm going to have in collectible production or in collections. So that's why this forecast is really only valuable for a 2 or 3 week period of time. Because ultimately I could project out a lot of these expenses, but if I can't project out this out for the next 2 to 3 months, then none of this is valuable.
Yeah.
And maybe I'm oversimplifying that. But I genuinely feel like if I'm looking at forecasting my cash, I have to do it in 3 and 4 week snippets.
To be more accurate, to have it be a tool that's accurate.
Absolutely. Because what, can I take my June of 2020 and compare it to June of 19?
No.
I can't at all. So, and maybe in, pre-COVID life, we could. And maybe we can for the 3rd and 4th quarter of the year. Maybe we just expect that it's going to be business as usual minus 20%. So you can try and fill in some of the variables with some of this data, but then the forecast is only as good as the data you're pretending to have. And so what this also has is a place for me to infuse cash. So if this practice got a PPP loan this week, or an EIDL loan, or whatever it is, there's lots of new cash infusions into practices right now, then that'll start to show on my net liquidity, how much cash I have on hand. Okay. And again, I hate to at a significant risk of oversimplifying something that actually is fairly complicated. We wanted this to be as simple as possible and that the practice owner could do it themselves.
Okay. Yeah, exactly. And Danny, speaking of that, have you seen practice owners actually identify a team member that could do this effectively? So can this be done in-house, or what are your thoughts?
Yes and no. So technically it could be done by anybody who has access to the financials. We don't typically recommend that be somebody in-house.
As an owner, I wouldn't want that ever.
Yeah, fairly sensitive data, especially right now with PPP and needing to accumulate information that you may not want the team to see. If it's like the practice owner spouse,
right,
definitely simple enough for them to do on their own.
You bet.
So what questions? What questions might you have?
One of the things that we hear is burn rate. So is burn rate, what is your definition of burn rate?
So our definition of burn rate is how much cash I burn through in a specific period. So for us, typically burn rate's like a monthly number.
Gotcha.
And that burn rate is a combination of all the expenses on my P&L plus the money that goes out on the statement of cash flows. That's like the simplest version of a burn rate, because that's all the money that I need to have in my account at the beginning of the month to make sure I still am a viable business at the end of the month.
Yes.
And they're like, well, but I'm not going to include my owner's draw on my burn rate. I'm like, yeah, you are, because you have to get paid.
That was my question, because a lot of these dentists are trying to not take out their draw, which isn't working.
Right, because at some point that money has to get spent.
Correct. So you mentioned burn rate is a period of time, like a month. Is it a month, or would they do it by amount of working days?
So I love that question, because right now, especially, a daily burn is a really important number to know. Because we'd say, a typical dental practice is going to be open 16 to 20 days a month.
Right.
20 on the high side. So if I know my monthly burn rate, then I can take that monthly number and divide it by number of days worked that month. Then I very simply get how much money do I spend every day I'm open.
I like that
it's a
better.
month like,
That's
and if it's a month like July, where I know I'm only going to be open for 13 days, then my daily cost of operating the business goes up.
Way.
Right.
And that's not a bad thing or a good thing. I'm just, for them to be able to understand their daily burn right now, getting through like reopening and in any case, it's important to know, but especially right now where they're going, well, I'm only employing my team at 50%, or I have increased expenses in PPE and all those things. Daily burn is going to help them get through that.
Let me ask you another question related to the daily burn. I love that it's they're if they use the actual open days. Now I have some practices that they have a half day as being a 6-hour day. Would you count that as a day? And then I have others that are open from 8 in the morning to 9 at night. So it makes a little same, just by day.
I would, but here's a caveat. So that when we track the numbers, we separate out any expenses that might vary with the amount of hours they're operating. So my rent doesn't change if I work a 6-hour day or a 15-hour day.
Sure.
But my hygiene cost does.
Yes.
Or my chairside assistant cost does.
Hmm.
So I want to be able to track my back office costs or my front office costs, depending on how they're paid, with the amount of hours I'm chairside. But there's quite a few of those expenses, like my waste disposal bill. They don't care how many days I was open.
No.
Right. So I have to sort of assess how that is for that one practice. But I do want to be able to add some fluff there, because if I'm open for a 10-hour day versus a 4-hour day, my daily overhead could be fixed, but then my production is going to be 300% more one day than the other day.
Right.
So hourly, you'd recommend backing it into an hourly rate if you had those kind of variables.
Well, I love doing that, but we have that data,
Uh-huh.
and it's easier for us to manage than a practice owner. A practice owner is going to listen to that and go like, I don't even know where to start. to track your hourly, right? They don't know what the hourly production rate is for themselves or for their hygiene team, and so some of that just starts to become instrumentation that they don't want.
Yeah, absolutely.
But ideally, if you had your choice, so you've done the simplified version, which is an amazing start. This gets us pretty clear. But
Yeah.
ideally, if they wanted to take it to another level, if they were a more complex practice with multi-specialty, open, 8 in the morning to 9 at night, 6 days a week, probably they
Absolutely.
could benefit from some more detail.
Absolutely. And especially if they've got specialists coming in, because then it's a matter of chairside time.
Yes.
Right. If I've got an endodontist coming in once a week, or I've got a prosto, or I've got a oral surgeon or somebody coming in once a week, then I can see how much time they're sitting in the chair and producing. And there's some good ROI there, because they're like, well, I'm only paying them, I'm paying them 35% of everything that they collect. So there's 65 left over for me. Well, that's true. But if you were in that chair, you'd have 100% of what you were collecting. And that may or may not be more than their portion. So I do agree that if you start to break it down that way, the practice starts to have much more clarity on how all of that stuff affects this right here, their cash flow.
Yeah. So it would be even by provider we're talking about, when we're talking about the specialist, by provider, what's their burn rate, or what does it cost to have them there?
Yeah. Yeah. And we regularly provide that for the hygiene side and then for the restorative side. But again, it makes it pretty easy when you have dental intelligence and the practice is going in and managing clinical hours, because you can very easily look at production per hour for all of the providers.
Correct.
And then all we have to do is take that with the payroll data and say, well, this is truly what it cost you, and this is what they produced for you. So again, oversimplifying things, but when you have good tools in place, it sure makes it easy to oversimplify.
It does. It does. That's one of the reasons you love that tool, Danny, is that very reason right there. It allows you to help with that decision making, doesn't it?
Yep. Because otherwise, if you want to start to break that down hourly, and then you have to go into Dentrix and run like 8 different reports.
Yeah. Yeah.
Wieldy. Yep.
Yeah. Yeah. Wonderful. Well, I think this gives us kind of definitely the mechanics on this. And I love it that there's a simplified version, like a put to work immediately. And then really for those that want to get a little more kind of get in and dig around, it really is about expanding it. Go
Yeah.
ahead. What are you showing us here, Danny? This is
So
great.
one thing that you talked about real quick was, finding the money.
Yeah.
And there's some things that practices can also do really quickly to sort of assess what their overall labor costs are, what their, on the P&L, are my expenses appropriate? And those are like one-time changes. Like it's not like an ongoing, I need to assess this all the time. But right now, if I'm looking at my cash flow and liquidity and I'm going, man, I just really wish there was more left over. What can I change? And this is from a presentation that we did that also incorporated practices that we're doing sleep and TMD. They were either limited practices to sleep and TMD or their GP with like a sleep sidecar. So these are kind of the target numbers of what I should be spending of my collections, right, of my revenue, what I should be spending in each of these areas. So I thought maybe that'd be helpful.
Yeah.
I have a question, Danny, on that, because every owner is asking me, is that just payroll, or are we including the perks and bennies? How do
Loaded, unloaded, Shell, huh?
Is there
Yeah.
do you take like a standard percentage that you add on top of their typical payroll to take into account taxes, insurances, profit sharing, scrub allowances, all that good stuff?
Yeah. So the answer to your question is yes, you do need to take that into account. And if the owner, or if there are irregularities to payroll and expenses, those need to be taken into account. But one thing that's important to us is when we look at this payroll number, we want to be able to include some aspect for the dentist who's the clinician in the chair, right? Who is actually producing chairside. And if the doctor is paying himself, $10,000 a month in wages because that's what their accountant told them to pay, that's completely unrelated to the operational target of that practice, right? Because I need to see what it would cost to run that practice with the doctor in the chair, whether they're an owner or not.
Right.
And that payroll cost, including an associate off the street to run, the clinic side of my practice, needs to be 30% or less. And that should include bonuses, and it should include insurance, and it should include whatever fringe benefits are being paid to my team.
So the 30% that you're talking about, Danny, is inclusive of the associate, and it's fully loaded based on what you're seeing.
Yes, but it's not usually a 30%. It's usually more than that.
I know. That's I don't see those numbers.
No. Well, but then again, when you start to see the fact that in order for them to have a third of their money left over, to have a target net income of 35%, that is the biggest number that affects that. And
Yes.
especially right now where we've got so much, irregularities in the staffing side of a practice right now over the last 8 weeks, where they've needed to trim the fat, spare the muscle, and save the bone, right, in terms of staff.
Right, for sure.
This has to be on the radar of operations going forward, because if they bring their team back and they see that their payroll is at 40%, this isn't going to be anywhere close to this. Because look at what else you can affect. You're not going to really affect your lab fees a ton, your supply bill a ton. Nobody markets at 3 to 5%. Most practices market at 1 to 2.
Right.
That's really not going to change much. And rent is rent, whatever it is,
right,
what you're paying. So this is almost the only thing that you can genuinely affect right now.
Absolutely. Absolutely. Yeah, exactly. That's something that Shelley and I are wrapping our head around, is that very number, and how do we help coach our clients around that to be from this perspective.
Yeah. So hopefully that helps answer some questions, mostly on the cash flow forecasting. Anybody can download this. Like I said, they just go to our website, cfodentalpartners.com. I think it's called resources. I think the tab's called resources.
Yeah.
And it's just right there. Download it. It's free. Play with it. Have fun. Let us know if you have any questions.
Nice. So once they get to find out their cash burn rate a day, then they can appropriately set the goals, correct? You
Yeah,
have
because
backwards.
I mean, once they understand how much money they need to operate the business, they can start to make decisions around who am I bringing back or for how long, and maybe estimate what these payroll expenses are going to be. If they think, well, my average week, payroll is $8,500 every 2 weeks, so I could start doing this and go, well, I think that's what it's going to be like if I bring my team back at this rate.
Right.
But if I'm only at 50% and I want to be at full, 100% by mid-June, then I need to bring that back up to its, normal payroll costs.
Right. Yeah.
Anyway, I know that's like super oversimplified. But
That's some sobering decisions, though. That's the weight of it. We're processing, delivering those kind of messages.
yeah.
I like your plan. Go download it and play with it. I don't like to be the one to deliver that.
Well, so what's the biggest concern there is that they're having to decide that there are team members they won't be bringing back.
Tough stuff.
Or because again, these are percentages of revenues. So if you guys can help them come up with a strategy that increases the total revenue,
right,
then those percentages are still going to be in line, right? So there's only two ways to affect net income.
That's it.
Lower expenses, increase revenue. And so if there are appropriate ways to have payroll above this percentage for a period of time, because if you say, look, I'm creating a new incentive plan and it's a bonus of X when we hit these levels of production, then maybe for a time that payroll percentage is going to spike out to be pretty high. But as they continue to produce and you get the results that you want and that revenue number climbs, then it all kind of balances out again.
Definitely.
For sure. I think that's what we're hoping for. And we, of course, know that part of the equation, Danny, because that's really what Shelly and I work in all the time. How do we increase production? How do we, support them in that? What are the systems to support that? And I think it is this, we don't exactly know what this is going to look like. And so Shelly and I want to be prepared either way. Because it's like, okay, well, if that flow isn't there, then what? And how do we support that kind of decision making? What else would you add to that, Shell?
Well, that's correct. Right now in the Northeast here, we're still in stall. So the teams have not gone back yet. They're still contemplating the length of a hygiene appointment, which plays into what kind of cash flow is this going to generate. They're contemplating how many of the specialists are coming back right away. It's a lot to wrap their head around, and we need this bare bones number. We need to get to this bottom line break-even number for sure and work up.
Yeah.
Yeah, beautiful. So I think this really does give us a new tool to manipulate these numbers a little more closely, Danny. So we really appreciate your, that you're ahead of the game. It's on your website. So that's really cool. We don't even have to attach the handout because it's here for us. And so we're very appreciative of you stepping us through this and really stepping our clients through this new way of thinking about the money that's left on the table.
Yeah, you bet. It's my pleasure.
Yeah, thank you.
Thanks so much, Danny. I appreciate that you're working on the future. That's what these dentists need, not the history of what was, but to figure out what it will be moving forward. So what is your website name again, Danny?
CFOdentalpartners.com.
Perfect.
Beautiful.
Thank you.